The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the February 25th, the terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there's having a great day. Yeah, let's make sure we have an extraordinary one. Now, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know that I'm absolutely grateful for your presence here. But more important than that, and that's this. During this next 53 minutes, I'm here to serve you. So feel free to send me an email. Send it off to steve@tfnn.com. In the subject heading, please put radio show question. And, of course, if you're inside our Tiger's Den, well, then any and every ping will do. So let's go ahead and get this show started on Terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Well, we begin our day with all the U.S. indices that we track. I take that back. Most of them traded the downside. The New York Stock Exchange just went slightly positive. Dow down 32 points. S&P 53. NASDAQ 100, 337. Russell's off 12. Trannies are down 81. Semis are down 81. NASDAQ Composites off 333. And as I mentioned, New York Stock Exchange up just slightly. You've got gold that is trading down $55, trading out at 29.08. Silver's down 86 cents. Print out 31.75. Light sweet crude is down $1.79. Print out at 68.91. Natural gas is up 4 cents, printing out at 4.03. If we take a quick peek at some of the counts that are out here, TD9 counts that we've got, well, we're taking a look at natural gas. We know we've got that TD9 count pattern on a daily basis. Prices pull back, test the top of its profile. Screen oscillator and change line. Its overall signal is neutral. That really may have been the buy point yesterday, testing that 3.895 level out there. If we take a look at the utility sector has a completed TD9 count pattern. Prices pulling back and it's testing profile support right now. That profile support is at the price point of is at 79.02, below 70. Can't be. No, could be 79.02. A close below 79.02 would likely suggest a move to its breakout level. That's the XLU. That would be 77.93. We take a look at the Great British Pound. The Great British Pound completing a TD9 count topping pattern out here. It should pull back towards its oscillator and change line. Let's go find out. So today's going to complete that pattern. The oscillator and change line down at the 1.2573 level out there. That's where it should go ahead and target. What else do we have? We've got Apple. Apple is going to complete a TD9 count top today. Let's figure out where that might pull back to. Again, these are all based upon the TD9 counts that I've got on this, I don't know what we would call it, just the tool that I'm using to let me know what instruments are doing out there. Right. So we take a look at Apple. Today's going to complete that TD9 count top. What price should do is pull back. Now we don't have profile support. So what price should do is pull back and test the oscillator and change line. Currently put it at 241.67. If price closes above, tests and rejects that level, then you get to the neutral signal. That would be a bullish outcome. If price were to close below that, now that number is going to change. Use 241 right now, I suppose, as the round number level. If price were to close below that oscillator and change line, certainly for 2 consecutive sessions, that would signal move back to its breakout level at 228.13. That, of course, is in lieu of any new profiles that might form out there. Don't see any other accounts out here for us to peek into. So let's take a look at that advanced decline line for Peter in Park City. We'll take a look at that and the spot VIX index, which is traded above its 50-day exponential moving average. So over on the right-hand channel, spot VIX is at 1666. You can see we're trading up at 2050 as we speak right now. So this is provides sellers with an edge out there. New York Stock Exchange, Peter, the advanced client oscillator is still below its zero threshold level. It's at minus 53 as we speak right now. That also provides an edge to sellers out there. So sellers are the ones with the edge. Let me just close this down since we don't need to go take a look at that. Let's go take a look at the daily equity future contracts. Let's just go try to do that. Daily equity future contracts. So let's just pull these up here. So we take a look at these. We can see that the ES Mini is right now back at, or is testing support. That happens to be the bottom of its profile. That's at 59.36. So we're at support there. The ES Mini is the only one of the 4 equity future contracts that is sitting at support right now. The Russell 2000 would be number 2 or could be number 2, and that price is testing. It's a swing low from January 13th. That swing low is what set up a 3-river Morningstar pattern. It set up a bullish hammer candle out there, and a close below that low. That low is at 21.7220 is going to suggest that we move lower. Otherwise, you could get a test and rejection of that swing point. If you can't bust them to the downside, you try to bust them to the upside. The upside action out here could take you up to the 22.41 level. So it's the ES and the Russell 2000 that you should keep your eyes on today because they're the ones that are testing support. If we open up the charts for the NQ, what we can see out here is there really is no level of support. Price closed below the bottom of its profile. Now, this is pulling back into a bullish hammer candle swing point for back on January the 13th. That might have been the same thing we were looking at inside the Russell. Doesn't matter. The top of that candle is 21.037. I don't think we've gotten down. We've gotten down to 20. The low is 21. Oh, we did 21.028. So we have tested that level. So watch that at day's end as well. Does price close above 21.037? If so, you would have a test and rejection of a bullish hammer candle swing point out there. If it closes below 21.037, the question is, does it test 26.94? 26.94 is the low of the January 13th swing point. If it tests and rejects that, then you'd have a rejection. Now, I don't know if it would be on lighter volume or not, but from a swing point standpoint, that's what you would have. So a close below 21.037 suggests you get down to test 26.94. If it's already tested the 26.94 level, then you have a test and rejection of that swing point out there. That's what's going on inside the NQ. Lastly would be the Dow Equity Future Contract. Now, the Dow Equity Future Contract has an A to B equals CD pattern to the downside. It's achieved more than the 1-to-1 level out there. If you were to get a bullish reversal candle today inside the Dow, that would go ahead and generate a Gartley buy pattern. So that's what's going on with the daily time frames for the equity future contracts. We ought to take a look at what's going on under the covers in the intraday charts. That wasn't the set of charts I was looking for. It was more likely this one. This is the NQ out here as we take a quick peek at the NQ before we go to a break. What we don't see on any of the intraday charts out here is any kind of bottom pattern. You do have a couple of Rhodes momentum indicator signals triggered. That's on the 30 and the 60-minute time frame chart. Those need bullish reversal candles to confirm a bottom there. Steve Rhodes with TFNN.com. We get back from this break. We'll take a look at the ES Mini. We'll take a look at ALAB and, of course, any other requests that come on in. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. Give me a second here. My screens are updating as I was trying to update a set of charts out there. We're going to take a look at the we're going to take a look at the ES Mini first out here. We'll take a look at the ES Mini. We had mentioned on the daily time frame, price was testing the buy zone of its daily profile. The bottom of that buy zone, the bottom of that profile being at the 59.36 level out there. Now, we can see that the 4-hour time frame chart is on bar number 8, working on bar number 8. This closed at 2 p.m. This is more likely not going to go ahead and confirm a TD9 count bottom pattern. When the market closes, it'll complete that pattern at 11 o'clock this evening. The 120-minute time frame chart needs a bullish reversal candle to confirm a Rhodes momentum indicator bottom. The same is true for the 60-minute chart. Same is true for the 30-minute chart. The 15-minute chart confirm both the Rhodes momentum indicator bottom and a TD9 count pattern. Now, on a 15-minute basis, price is trading with inside its profile. Support is 59.40, but the real support level has to be the low of bar number 8. It needs a close below 59.3350 to suggest that you're going to continue to move lower out there. To the upside, you've got resistance at 59.55, center of its profile, oscillator and change line 59.62, and the top of its profile 59.71. The 59.71 number is not going to change no matter what. Well, that's unless a new profile forms. And so you're looking at that number. If price closes above that, you would expect or anticipate a rally up to the 4,007 level out there. That's what's going on inside of the ES Mini. Let's take a quick peek here at the Russell 2000. That was testing the bottom of its profile. I'm sorry, that was testing a swing point, a Rhodes momentum indicator bottom swing point. So the question is, do the intraday charts suggest any kind of bottom that is also attempting to form as that daily tests that swing point? We'll have that answer here momentarily. I see on a 15-minute time frame chart, although not fully populated, a Rhodes momentum indicator bottom pattern has already confirmed. Same thing on the 30-minute time frame chart. The 60-minute time frame chart needs a bullish reversal candle, as does the 120, as does the 240, and as does the 5-hour time frame chart. So bullish reversal candles are what those time frames need in order to confirm a Rhodes momentum indicator bottom. But you got your first signals on the 15-minute chart and on the 30-minute. So what that means is that it means the low of the day so far for the Russell 2000. Let me give you that number. That number is at 21. Let me give you the right number. 2159.70. A close below 2159.70 is going to suggest lower price. You do have, again, a couple just these very shorter term intraday time periods that are attempting to form some type of a bottom out there. So that was the Russell 2000. We might as well look at the Dow as well, right? Because the Dow has that A to B equals CD pattern to the downside, and a bullish reversal candle in it today will actually confirm a Gartley buy pattern. So let's test that. Let's take a look at that. So we take a look at the Dow Equity Future contract. Just waiting for this to populate. Looking for intraday signals similar to what we saw in the ES and the Russell 2000. 30-minute time frame chart for the Dow Equity Future contract has a Rhodes Momentum Indicator bottom. Price right now is attempting to get back inside its profile. 16-minute time frame chart needs a bullish reversal candle to confirm a Rhodes Momentum Indicator bottom pattern as well. You've got one already confirmed on the 2-hour chart. You have one confirmed on the 4-hour time frame chart. You have one Rhodes Momentum Indicator bottom patterns on the 5-hour time frame chart. Wow. So you've definitely got all the signals with regard to the Dow Equity Future contract, with the exception of the daily candle out there. If the daily candle turns into be a bullish reversal, a signal out there, then you're going to have a Gartley buy pattern that would then suggest a rally that would take us up towards the 44,374 level. So that's what's going on. We take a look at the 4 daily equity future contracts. As long as we're here, let's go check in on gold, which is getting hammered this morning. Now, if you, oh shoot, that didn't work. Try that again. If you happen to catch the segments that I did last evening with Jacob out there, I think one of the very last things that we got to, which I'm going to go ahead and I'll punch that up on the screen here in a moment. Slideshow from current slide. So this is what we were looking at. Well, that wasn't it. Let me get to it. So we were looking at this slide yesterday. At this slide here, this takes a look at, so gold forms best during geopolitical turmoil. We've most certainly had geopolitical turmoil over the last couple of years. The two biggest things being the wars, the one that's in Ukraine, and then the Hamas attack on the kibbutz in Israel. The yellow horizontal lines identify the specific date. For example, the Russian annexation of Crimea, February 20th, 2014. That shows you where gold was trading. So the question is, do we think that the annexation of Crimea really had any impact on gold? The answer to that question is no. Gold was trading lower, not trading higher, really. Then let's go to the next instance. The next instance was Russia invading Ukraine. That's all the way back here where my cursor is at. What did gold do? Gold actually moved lower, didn't move higher out there. So is there a premium inside of gold because of the Russia-Ukraine war? I'll assume there's some, but it's nothing like what appears to my eyes to be the premium that would be in there with regard to the Israeli Hamas attack out there, the Hamas attack on Israel. Probably stated better out there. What did gold do from the very moment after that October 7th, that evening on Sunday out there? What did gold do? It moved higher and hasn't looked back. Now, this is a snapshot from yesterday's. The point that I'm making here is that I believe that, gold's back 55, maybe it's $60 by now. You lost audio? Oh, that's a bummer. So I really think, so what we're seeing today could be some of that premium, truly some of that war premium coming outside of gold. Now, when we take a look at gold here, you can see the attempt for it to form a new daily profile. 29.22 is the bottom of that daily profile. The 5-hour time frame chart, price pulled back and right now is testing its breakout level. That's at 29.06. 29.0490 is the breakout level for the 4-hour time frame chart. The 2-hour time frame chart, 29.0490. So we know that gold right now is back to a level where price should find support. Doesn't mean that it will, but it's now at a good level. We don't have any intraday bottom signals. With one exception, that being the 10-minute chart. The 10-minute chart went ahead and formed a TD9 count bottom pattern. Its low is what you'd be watching because a close below that negates that signal. That means 28.97 and suggests that we continue to move lower out there. On a rally, we might find resistance between the 29.19 and 29.24 level. A close above 29.24 would get you up to the 29.57 area. So that's what's going on with Goldilocks out here. What else? What would be the last thing? Well, we take silver out here. So we've got silver. Silver is still in the March contract. So let's pull up its charts, see what it is doing. I can't remember off the top of my head. No, I just don't want to make an error out there or give you something that I think. So we can see that silver on the daily time frame is trading below profile support. That's at the 32.16 level. I'll squish the chart on the daily time frame to see where that red breakout line is. Looks like it's about 30.50. So it closes the day below 32.16. We'll bring that TD9 count breakout area of 30.51 into play out here. No bottom signals on the 5-hour. The 4-hour is in bar number 8. That means when the market closes today, the cash market, you'll have a TD9 count pattern. That TD9 count pattern will complete at 10 p.m. this evening. No bottom signal on the 2-hour, not on the 60, not on the 30, nothing really on the 15, just a 10-minute TD9 count bottom pattern. Steve Rhodes with TFNN. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs? Trade wars? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are February 14th and 28th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. Got an update on my iPhone last night. I'm assuming many of you did as well. Email system is different for sure. And I'm not sure what I'm missing out here. But do send me an email, steve@tfnn.com. Hopefully I'll find it. If you do have a request out there, let's get the requests that have come in. The first one from Duncan Steve inside the Tigers Den. Let's take a look at ALAB out here. So this has triggered, price is trading below profile support. It's trading below a swing point. Is it trading below it? Yeah. So there's a swing point that formed out here, Dunk, on January 27th. 16 million shares traded hands that day. In 2 hours of trading today, we've done 4 million shares, so it's coming back with lighter volume. If it closes below the low, 79.55, it'll still trigger an A to B equals CD pattern to the downside. So that would be one pattern that could be in play by day's end out here. Let's draw in the A to B line. Let's copy and paste the A to B line. Let's go ahead and move that over to where the C point would start out there. And that would take ALAB potentially down towards the 43-ish area. No, I'm not getting the exact numbers out there, just giving you the basic target zone out there. There's a Rhodes, so that's the one pattern that is potentially in play out here, even if price closed below that swing point with lighter volume. The second pattern, it did trigger today. Today's move lower has triggered a Rhodes momentum indicator signal. That requires a bullish reversal candle to form a bottom. And if that forms a bottom before the A to B equals CD, the A to B equals CD pattern kind of goes away, because you'd already have a bottom signal. But short of that, looks like price is going towards the 40 level out there. If I look at the weekly time frame chart is traded below profile support as well. It has a swing point that had volume of 42 million shares so far in just a day and a little bit. We're at 10 million shares. But that sounds like to me like price is maybe pulling back with some volume. So you could get a confirmed weekly A to B equals CD pattern. You can see the weekly chart has breakout support at 36.85. So most certainly that becomes a target as well. And the monthly time frame chart, just not enough data out here, Dunk, to provide us with a ton of information. So that's what we see when we take a look at ALAB. That was for Duncan Steve inside the Tigers Den. John C. in the Den wants to take a look at MU, Micron, I believe that is. We take a look at what this is doing. It's testing. It's trading back into its buy zone of its daily profile. That zone runs between the level of 91.46 up to 93.51. So price is pulling back into its buy zone. What else do we see on the daily time frame out here? What do we see? Micron. It's been pretty much a sideways consolidation, taking us back into the time period of August of 2024. It's really just a sideways consolidation. But right now, price is pulling back into its buy zone out there in the daily time frame. The weekly time frame chart is a consolidation with inside profile between the range of 86.39 and 106.34. With price trading below the center of its profile and below the red oscillator exchange line, that's a signal price wants to move lower. Of course, that lower move is going to be dependent upon the daily buy zone out there. But if price did close below 91.46, that's the bottom of that daily profile. 86.39 would be the next downside target. On a monthly basis, Micron has a TD9 count top. Price is trading below profile support. So it always opens up the door for a move to 63.88 out there. So the daily is the most important thing. It's been in a pretty wide-ranging consolidation. You can visually see it on the weekly chart real easily out there. That sideways consolidation. You trade it into an area where it may find some support. So, John, I hope that helps you out. Thanks so much for your request. Who wrote in this next request? I didn't write it down. Can I see it real quickly? Who was it? It was Jambalaya who wrote in and wants to take a look at CLX out here. And his question is, this has filled the gap. Is it now time to short? So the gap he's referring to, CLX, gap down on the trading day of February the 4th out there with about 4.6 million shares. That sets up a gap. The gap is the low of the gap, or the high of the gap, I should say, is the low of the candle from the day before, February 3rd. And that low is 158.28. And the high of the gap would have been the high of that earlier, the following session. That was up at 155.97. Now there are about 4.6 million shares, as I say, that traded. That day, the day prior was 2.5 million shares. Right now you're moving up with 280,000 shares. So you're most certainly moving up with lighter volume. Is this the time to sell? If I look at the weekly time frame chart, the weekly time frame chart has a completed TD9 count bottom. And price right now is taking on resistance, and that is the bottom of its profile. And that's an important level at 158.50. And it doesn't matter where it's trading at Tuesday at 11:36. It matters where it's trading at Friday at 4 p.m. So because you have that weekly bottom pattern out there, because the monthly, you're trading with inside your profile and price is above the center, price is above its oscillator and change line, that's sort of a bullish type signal out there. I'm going to go with the answer is no. Don't go short. I don't know what CLX is. I don't know if that's Clorox or what it is. It doesn't really matter what it is out there. What you're watching for, though, is watching for price behavior for the rest of this week out here. Does price get back inside its profile? Does price take out its weekly oscillator and change line up at the 160.26 area out there? If it does that, that's a signal that price is going to rally even further. Now, in the daily time frame, where price broke down from was very close to the 164.41 level, the TD9 count breakdown level. That might be a better place to go short. You also are in bar number 5 of a TD9 count pattern. So today is Thursday. That says you could get a TD9 count top between days 5, 6, 7, 8. That would take us into Friday to early next week out there. So no, I don't think this is the time to go short. I don't have any of my intraday charts out here to help us with that signal, but the weekly and the monthly are adding to that idea of not taking a short position out there. I hope that makes sense, ELO, and that was Jambalaya. Again, should have written it down. Let's go to take a look at Tesla's for Rahul's got a couple of requests in here, Tesla being the first one, TSLA. And Tesla right now, let me, oops, sorry. You didn't see what I did. Tesla is trading below the bottom of its bullish structured weekly profile. A close on Friday below 327.15 is going to tell you that it's going to move to 238.88. Well, Stevie, could you tell me now if price is going to do that? I can't. What I can tell you to do is watch the monthly oscillator and change line. The last level of defense right now for Tesla is that monthly oscillator and change line. That price point is at 298.71. What I would say is if price begins trading below 298.71, then that's going to increase the odds of a move back to that 238.88 level, and that is the weekly breakout level sponsored by your TD9 counts out here. On a daily time frame for Tesla, you've got a confirmed A to B equals CD pattern to the downside. The daily chart says watch for a bullish reversal candle. A bullish reversal candle would confirm a Gartley buy pattern. Steve Rhodes with TFNN. We come back, we'll take a look at Amazon, NVIDIA, GGN, and anything else that's been requested. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds for both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. A question that came in is if I can help to identify where breakout support is on the major indices for the daily time frame, and the answer is I can. That's coming in from Mr. Bill. Now, Mr. Bill, with regard to the Dow Jones Industrials, the breakout level of support is 42,927.76. Folks, when I'm referring to these as breakout levels, these are the TD9 count bottom patterns out there. For the S&P 500, the number is 5887.26. For the NASDAQ 100, the number is 2436.80. For the Russell 2000, I'm not going to open up a chart because I just ran into a problem when I did that during the break with the transports out there. 2102 is its breakout level of support. For the semiconductor index, it's down at 4472.35. For the transports, it broke through the first level of support, which was 16,118. The second level of support was at 15,785.46. That's the level that we are testing as we speak right now. The NASDAQ composite breakout level of support is 18,714, and the New York Stock Exchange is 19,176 out there. Those are your breakout levels. With regard to the equity future contracts out there, the breakout level of support in the ES Mini price is already trading below that. So you'd be asking where's the second level if, in fact, this profile area here fails. Let's see if we can easily identify that. I'm sure we can. It's going to go ahead and turn on the indicator. And we'll get two of those lines out here now. So price right now is testing profile support. Below that, the next level breakout support is at the 55.23 level. That's the ES Mini. That is the March contract. Shoot. I don't know why I'm having trouble, but I am. And it did the same thing. Shoot. Okay, what I could give it to you on the Dow Equity Future contract is 42,752, and 2159 is the number inside the Russell 2000, and inside the NQ, the number's down at 19,020. So those are your breakout levels, Mr. Bill, for all the major indices out there. Hope that provided you with the information that you were looking for. When we went to that break, what was it that we were looking at? I think it was. No, I think we just finished taking a look at Tesla. So let's go on to the next request, which I believe is to take a look at Amazon. We take a look at Amazon out here in bar number 7 to the downside. It's trading below its TD9 count breakout level. Let's go find out where that next breakout level is in its time frame, its chart. Give me a moment out here. We can get there, get that number up. Sorry. 2. Okay, the next breakout level inside of Amazon is a 201.79. That's its price target. Below that, we would bring the weekly price target of its breakout area into play, and that's at 185.23. And on a monthly basis, you've got support at 202.68. So in the case of Amazon, I'd be watching this 201.79 to 202.67 level. If price closes below that, the next move is going to be 195, followed by 185 out there. That's what I see when I take a look at Amazon, Raul. Let's take a look at NVIDIA out here, see what it is doing, get that same type of information. NVIDIA right now is trading below profile support. It's got a TD9 count top and is headed back towards its breakout level. The breakout level for NVIDIA is at 120.76. On a weekly time frame, price has gotten back inside its profile, its level of support. So if 120.76 were to fail, then we'd be looking at 114.86. 114.86 is the weekly TD9 count breakout level. We can see that that was tested 4 weeks ago. And finally, NVIDIA, the last level of support for it would be, it's really two levels. One is basically where we're trading right now, which is its oscillator and change line, 126.70. Below that, the next level of support would be at 109.42. So I hope that's what you were looking for with that information, Rahul, with regard to NVIDIA. And thanks for your request. ELO wants to take a look at GGN. So let's get those charts pulled up on our screen. Did I get those here? I think I might have. GGN. GGN has a TD9 count top. You know what I don't have out here are any of my profile levels. We're going to call a bit of an audible here, and we're going to just simply going to have to wait for this to populate, but just give me a moment. We'll put in GGN, and the reason is because I was unable to give the information that I needed to for ELO with regard to GGN. We didn't have any profile information. So we do right now. On a daily time frame, that's the first chart that is populated. That's the one on your left. What that shows is a TD9 count top. And we have price right now that's pulled back into its buy zone. The buy zone for GGN is between the level of 406 to 410. If price were to close below 406, you have breakout support down at 402. Close below 402. I'm not sure where that gets us. I think that's going to get us to 381. 381 would be the bottom of its weekly profile. Now, price right now is testing the support area this week of with inside that profile, and that's at 410. That is the weekly oscillator unchanged line signal out there. So GGN has got a monthly TD9 count top. Let me see if we can there we go. It's got a monthly TD9 count top out here, but price is consolidated with inside its profile. So right now, it's really all about the daily time frame chart. And the question is, where does price find support? Does it find support inside its buy zone between 406 and 410? But that's what you would be looking for. That's what you would be watching. So I hope that helps you out, ELO. Let's take a look at our next request that came in. That was from Lolo. Take a look at Shopify out here. Shopify today, it's got a TD9 count top. Yesterday took price right back to its breakout level, which held at 114.70. That has since given way. So where's price headed to next? Well, the next level of support, you also had a weekly Rhodes Momentum Indicator top out there. The next level of support is going to be the bottom of its weekly profile, and that's at 98.92. What happens if 98.92 fails? I would say price would then likely target 91.03. 91.03 or so is its monthly oscillator and change line. So again, confirmed top on the daily. Price closing below the profile. You have a profile change in trend that suggests we continue to move lower. The next level of support is 98.92. That's courtesy of the weekly chart. If 98.92 were to give way, then we'd be looking at 91.06, and that's coming from that monthly time frame chart. So that's what's going on. We take a look at Shopify out here. Mr. Rhodes, CLX is part of XLP. If you have time, could you put up XLP? Sure, let's go take a look at the XLP, the consumer staples area. I believe that negated a TD9 count top yesterday. That's just my quick recollection, but we're going to find out here momentarily, or certainly within about 20 seconds. So I see the A to B equals CD pattern. Go ahead, populate out there. Come on, give us that. And the answer is yes. Yesterday, 2 days ago, its TD9 count top failed. You're looking to short the XLP. What I would say, you can see the A to B equals CD pattern on the daily time frame. What you'd be watching for there is a what you'd be looking for there, Jambalaya, is a bearish reversal candle to confirm a sell the D point top. Now, if we look at the weekly time frame chart shows the XLP is trading above profile in its green oscillator and change line. It's in breakout bull condition. The same is true with regard to the monthly time frame. Both are trading into topping signals out here. One was a TD9 count top on the weekly chart. That would get negated with a close above 84 bucks even Steven. It's also traded into a swing point just above that had volume of 56 million shares. So far for the week and 2 days of trading, you're 20 million shares. Seems to me like price is moving into that with volume and is going to go at least test that high. We'll finish off the XLP. We'll get back to this break.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back. We're looking at the XLP. That's the consumer staples sector for the S&P 500. We can see on a weekly basis prices trading into its swing point. That's the swing point from September 20th. There was 56 million shares that traded. Hands that week, so far for the week, we're at 20 million shares. So it seems like we're moving into that with some volume out there. That would suggest that that high would get tested, maybe get taken out. That high is at 84.53. The monthly time frame chart also has that TD9 count top. We're trading to that swing point, which had volume of 220 million shares. We've got the rest of this week left. It's got 167 million shares traded there. That one seems like that could be some light volume, but price is trading, and if it closes inside the swing point, all it needs is a close on Friday above 82.08 to increase the odds of at least that high being tested if it doesn't get tested before then. So that's what I see with regard to the XLP. That does not look like a short signal to me out there. So I hope that helps you out. We've got about a minute left till the music comes on. Let's take a quick peek here at the ES Mini since we last took a look at it. Again, if we look at the bottom row of charts out there, you see a 10-minute Rhodes Momentum Indicator bottom with price getting ready to take on the center of its, the top of its profile. That's at 59.55. New profile. If price closed above 59.55, that would suggest moving higher. The 15-minute time frame chart has a Rhodes Momentum Indicator bottom pattern, but it needs a close above 59, well, also 59.55. If it does that, we'll look at 59.70 as then being the next battle. And above that, we'd be looking at 6,007. The 30-minute time frame chart, this candle is going to close in about 4 minutes and 10 seconds. It's currently a bullish piercing candle. To be a bullish piercing candle, just needs to close halfway into the candle before. Looks like it may accomplish that. That will be another bottom signal. Its level of resistance would be 59.64. And then above that, you'll be looking at 59.97 to 6,000. 6,000 is where a counter trend rally would come to an end for a 30-minute time frame chart. In the 60-minute chart, you never know. It might be a bullish hammer candle in the next 3 minutes to confirm its Rhodes Momentum Indicator bottom pattern. Folks, stay tuned for all the great programming. Great to be with you today on Terrific Tuesday. I'll look forward to seeing you tomorrow, 11 a.m. sharp on Wonderful Wednesday. Take care and have a great day.